All right. I think we are good to go. I'm going to check desktop audio. Hopefully I don't get pinged all over the place. And hopefully you can hear Steven and it's not too echoey. Man, what a start to the day. Out of control. So if you're new, we got a couple. Oh look, we got people jumping in. Okay, cool. So every Monday, I don't trade Monday mornings. You can kind of see why. But besides being on the West Coast, typically Monday morning I'll really reserve to the planning of the week moving forward. So that said, this is really just a recap of what I do, what the team and I do, and what we're looking at in terms of economic news, and we'll go through some levels as well. So that said, I'm going to jump through. So we're looking at options. Just before we get started, I always have to point out options are not for everyone, and you should read characteristics and risks of standardized options before trading. You can get a copy of that by calling 1-888-OPTIONS. So last week wasn't a huge economic data week, but these were the biggest numbers. I think it was kind of funny. So like home sales actually started to slow down. This was probably the biggest thing to note. Initial jobless claims came in Thursday higher. And so we've been seeing week over week over week a decrease in jobless claims. We know that there are jobs out there. We know that this is a big deal, and that's what the Fed is looking at in terms of their charter to promote full employment and control the cost of the dollar, or the price of the dollar. But yeah, the market was actually expecting more people to go back to work, and they got the opposite. So that was probably the biggest thing. Philly Fed Manufacturing Index, again, they're doing fine. But here's some of the headlines that I did grab. Mostly, Delta and Omicron don't seem to be that big of a deal, but it is this rate hike situation. And so we were pricing in, and every week, in succession, we've been pricing in, the market has been pricing in more and more rate hikes, and the market in general is just seriously begging for an interest rate hike from the Fed. Last week, worst week since the pandemic, and there were a handful of headlines that kind of, a couple of people pinging me, asking me what's this war situation. I really couldn't tell you that it's a thing right now. There was a Chinese headline that we had some kind of warship go over that way. If you got any military people, maybe they know. You can ping them. And a very funny situation in Peloton halting productions, which made that guy just fly all over the place. I think that was really the recap. We do earnings, and so just looking forward. So far we've had 6 of the top Dow 30 companies report: Walgreens, JP Morgan, Goldman Sachs, Procter & Gamble, UNH, and Travelers, and all 6 have beat. So just a note, I think that the market is expecting earnings to come in higher than expected for the most part. We're just battling with that uncertainty, and the market absolutely hates uncertainty. Moving forward this week, we officially kick off earnings season, which is a big deal for us. We have IBM, 3M, all of these here. These are Dow 30 components that are set to report this week. We do have an earnings system that we do trade. I'm going to put, if you don't have this in your server, I'm going to send it in chat. Link to the earnings trading system. So this is not a free course. I will say it's $50, and you can pay the $50 to get a couple trades with us, and you'll absolutely make that much, if not more. But really, it's like $50. You learn a full-blown system that's going to pay yourself for life. It's dirt cheap. So that said, moving forward. So this week we have 2 huge days in terms of economic data. So Wednesday, big Fed day. We'll probably have a little Fed watch party. Maybe your servers will have something similar. 2 p.m. Eastern, 11 a.m. Pacific. That's going to be the interest rate decision. So biggest day of the week right here, Wednesday. Friday is going to actually be the second busiest day of the week. So I'm just going to jump into this. So today we actually got some actual numbers, so I posted them here. Again, if you're new to this or this system or looking at these kind of things, what you'll see for the most part is previous numbers here. Consensus is what the market is expecting. Anything that comes in at consensus, you should expect that that will not be a market moving event. If it's different, if the actual number comes in that's different from consensus, that will be a market moving event for the most part, but it really depends on how far from the consensus the number comes in. So that said, all times here are listed in Pacific, so apologies if you're not on my time zone, but yeah, it's early here. So we did get certain things like this: market composite, PMI, services. So services sector is the biggest sector that's been hit by the pandemic. So that's always been a pretty important sector to watch. Again, it's anything over 50 when you look at these kind of PMI numbers means that you have growth in that sector, but decreasing growth. So previous number 57.6, we thought a little bit lower than before, but it came in a lot lower. So we'll get a little extended sell-off like you're seeing this morning, and that's typical. That's what you should expect. So when you're looking at these type of numbers, just know, hey, the consensus number is not going to be a market moving event. If things come in as expected, not going to be a big deal. What you should note is how far away from what's expected things actually come in. Tuesday, not a huge day in terms of economic data. We do have consumer confidence coming in around 7 a.m. Pacific. Here's the previous and consensus here. So if we're well below 100, yeah, we'll see how that goes. I think, you know, the consumer confidence will have consumer sentiment later on in the week. Housing prices really doesn't move markets lately. It used to, but maybe another day. Sometime in the future it will, but right now I think the market's really, it's just completely laser focused on this Fed decision and the rates and what's going on with that. So Wednesday we get into it. So 11 a.m. Pacific, 2 p.m. Eastern, we're going to get a release of the actual rate decision. The market is expecting 0.25%. This is going to be a weird situation where you can look at certain things, and we'll go through it, like the 10-year bond or TLT, 20-year bond. The market is screaming for a rate hike. So, you know, if Powell's listening to Yellen, she's a pretty big dove historically. Maybe if they don't raise rates, I would expect probably more sell-off. Actually, this is going to be a situation where my gut is kind of telling me, and it's just my gut, it doesn't mean it's true, that the market wants a higher than expected rate hike. So maybe 0.5% comes in and we get a rally. Bad news is good news kind of thing. That's what I would expect. Right now you're seeing a lot of flee to safety, a lot of fleeing to long-term bonds. If you look at where's the bull market right now, that's where it is. Earnings, we have 118 earnings coming in on Wednesday, right? BMOs before market open, we got Boeing. After market close, Intel. And Thursday, pretty slow day in terms of economic data. Really not a whole lot. We got GDP coming in, so quarter over quarter, this is historic data, which is weird. We're kind of like that stagflation situation where, yeah, we are growing, and we have more jobs being created. The hourly rates are going up, but yet inflation is climbing at a faster pace than rates are and not outpacing the cost of doing business. So that is what we're looking at, and that's why we're seeing what we're seeing. Friday coming in, so second biggest day of the week, PCE, right? So this is personal consumption expenditures, personal spending. So this is more like inflation, things like that. We're going to see income going up again here, but we're going to see probably spending decrease, which means savings increasing, and inflation really going up. Let me see if I can click this link actually. Yeah, boom, check that out. So what you'll see, consumer, right? This is what we're seeing right now. This is the curve. So that is where, that's really the issue that we're dealing with across the market as a whole. So just be aware. Later on in the morning, 7 a.m. Pacific, we do get consumer sentiment. Yeah, this is just what is the gauge of the consumer to how likely are they to spend money in the economy. So yes, maybe earnings are going up, but inflation is going up, spending will going up. I don't expect this to be going up. Anything over 60 is typically good. I don't think we're going to have a huge decline yet, though. And employment costs, I don't know why employment cost expectation is lower. That seems a little, I don't know who does these numbers, but Friday we have earnings. We do have a couple earnings that will usually come in before market open. Typically, like never any aftermarket close earnings on Friday. So that is what I would expect. We have a busy week for the crew, actually, and myself. We have Thursday, here we go, Thursday, we're also doing this webinar that you guys will see. Kind of good timing. So we're going to go over hedging, straddles, strangles, collars, costas, collars, things like that. So it's the 3rd installment of that series. This is free with your server subscriptions. So that's pretty much it. I think, did you have any headlines that you wanted to go over, Steven? Maybe something I missed?
No, I didn't. I didn't really see anything else.
Yeah.
As far as news, everything that I've been seeing on Twitter and the FinTwit space is basically everyone expecting further downside, regardless of what the Fed meeting yields on Wednesday. But obviously, that can change very quickly. So we'll see.
Yeah, I think Wednesday it's going to be the biggest day of the week, no question. I think today we got a little excuse to kind of sell off. Tomorrow we'll see if it's a green open tomorrow. I'm not buying that, but you never know, right? I think it's a little, market reaction. Market just does not like uncertainty, and this is like peak uncertainty. So expect choppy markets. We just moved I would assume the length of an average week, so we might have a little chop throughout the week. We probably made the biggest move of the week here, and then maybe Wednesday afternoon after this announcement comes in, we'll see some more. If you're trading Fed days, I will say the first move that you see is typically a fake out. So don't trade it. Give it a second to breathe, right? If you want to trade the opposite, if we get a little pop and then you slap it down for a little bit, I will do that every now and then. But that can reverse pretty quickly too. So it's usually the up, down, then after the second move, it'll follow through. So that's what you're watching for. And I trade that for sure. It's short-lived. So if we look back in time and we'll see, hey, look, the last 3 Fed days, FOMC and minutes, we've gotten some pretty epic moves. So I'll be trading it for sure. So that said, I think I'm ready to kind of move on here. Let me escape this. I'm just going to do a quick check on the markets. If I can find my chart here. So if you're looking to be a trader full-time, what I can say is you need to have a structure or a daily routine. And so that's the first part of the daily routine. Monday is the biggest routine. So the second one is you look at your indexes, right? This is my view here. I have 8. You might not need 8. I have the 4 major indexes for me on watch. So SPY, Qs, Diamonds, and the Russell. I'll watch Bitcoin. Sometimes this will be like oil, gold, things like that. This is a 20-year bond. This is the guy that's been moving the market for the most part. GDX is the gold miners. So maybe a little bit higher beta. You could probably put like crude oil. Crude oil is a pretty good gauge of inflation also. Although we got some stuff with the rigs moving around right now too, so I will say that. The VIX is the volatility index of the S&P 500. If you're going to be trading options, you have to have this on your dashboard. You have to know where the prices of options are relative to where they have been, and that's what this measures right here. Some people call it the fear greed index. That's, call it what you want, but what this will tell you is A, market sentiment, and B, the price of options. So are options expensive or are they cheap right now? This should kind of help dictate what kind of structures you want to put on in terms of options trades. At $30+, this is not dollars, right? At 30 plus, almost 35 on the VIX, this is the futures contract. I, you know, I had a bunch of people ask me last week, hey, like, is this a good time to jump in the market? And I'm like, I can't think, I can barely think 2 days forward in this kind of market, right? There's not much that you could really train on for this situation. You kind of just have to trade through it or have been through it in the past. Things are oversold for sure, right? They stay oversold. When do things stop becoming oversold? Well, when when they start going up. So until that happens, I'm not going to be a buyer. That's just what it is. That's from a trade perspective. Fundamentally, whole different deal. Not even relative. So into the indexes. So here's the S&P 500. This orange box right here. This is the length of an average week. Wow. I would normally have this on like a 15, but I have a feeling it's going to be really hard to do that. So here's the length. So we, in the first hour or two of trade, have already moved the length of an average week. Could there be more downside? Definitely. Who knows? But once we start bouncing, I would not expect like a boom off the bottom recovery. I would expect some chop for a little while and see some decision from there. The lines on my chart, so the purple lines are monthly high and lows, so prior month high, prior month low. Orange lines, prior week high, prior week low. Wow. Yeah, this, if it was an average week, which it's clearly not, that would put us to 424 and right around a pretty important level here. So, and then this red line here, that's actually a broadening range that's been forming on the indexes. So you can tell this broadening range, just lower lows and actually higher highs at the same time. Right now, we could probably test the low end of this broadening range. Let me see if we can get a little, maybe we can pull a here. So I just used volume average on this last kind of section here, which would put us about 417. Wow, that's a very extended range. Who knows? But that would be one of the first lines of support, if not this whole little area. So we're kind of entering this zone where we've bounced once, twice, three, four times in the past, give or take. So if you're short, I'm kind of pretty much in some. I'm pretty much in targets from a short perspective, so I have to wait for the next trade to show up. We got a couple questions. Any reason why VIX over UVXY? Absolutely. When all links be sent out for when we'll already registered, got the cool. So I sent in the bot the links to the webinar. I will go ahead and shoot you another one here. You can register as registration. You can register here, but unless you've paid, it won't put you through. So Insanity asking why VIX over UVXY. Well, pretty simple explanation here. I will show you one. Sorry to come off topic. Side by side. So just a blank, no nothing kind of chart here. So here's the VIX. I'm going to put it on the right, and we'll put this on a daily, right? So the VIX is the futures contract for the S&P 500 volatility index. UVXY is not. It's not actually related. So, well, I take that back. It's very much related, but it's an ETF. See this ETF? And it's an ETF that has a fee associated to it. And the UVXY, there used to be something called TVIX, if you've been around for a while. UVXY, watch when I pull this back. Monthly on both, right? So my chart is synced, so they'll be both the same. What's up with the VIX? So the VIX, why does it continue? UVXY on the left is designed to go to zero. It really is. And the VIX on the right, it's the measure of the volatility index. It's not. This is not the same chart. So just to be fair, UVXY is a very trading vehicle, and what it does is it actually measures I think it's like the first two futures contracts, and it's 1.5, I believe, X that daily move. So it will go up in short spurts like this, but just know it is designed to go to zero. And when it gets really cheap, you'll see something called a reverse split. So all of a sudden you'll have like 10 shares when you used to have 100. That'll happen on a pretty regular basis with UVXY. So fees associated with UVXY is not associated with VIX. If anything, you might want to look at VXX. That is similar. ETN, right? It's a little different, but it's not as bad. It is the volatility of the VIX, so that might give you a little extra beta, I believe. The biggest thing for me, it's a liquidity situation. So let's go 17 to 20. This went from 22 to 25 and change. That's about the same. I wouldn't really. At the end of the day, none of it is as accurate as VIX. Unfortunately, if you're in like a Robinhood or something like that, no, you can't get VIX because it's technically a futures option. And Greeks do work a little bit differently for that. So I'm going to go ahead and jump into the rest of these. So we got a target on. So what let's say target here really would be 425, 424 for the week on the S&P. I mean, we're so extended right now. I would just kind of like, well, I am just sitting back. Days like this, dude, just sit on your hands. It's not, you don't have to be in a rush to trade. You know, being a trader in a market like this, it's just about surviving, right? Being able to get out alive and live to the next day. We don't make big bets in this chop. It's just not, you know, we're not out to make $1 million a day. That's not, you know, unless you have $1 trillion portfolio. It's just not the way it works, unfortunately. We do have this kind of like chop area, so I would expect this, 426, right exactly where we are. See how I just snagged this prior level. We're sitting at a pretty big resistance. Do you have a level on the S&P, Steven? I know you sent this.
Yeah, in Discord, in the analyst channel, I posted 427 was my level.
Yeah. Well, I think we're there, right?
Yeah, we're sitting on it right
427.
now. And that was.
Yeah, we're on 427, so it's the same level most likely.
Yeah, that was from the levels from October of last year.
Yep. And these levels would be kind of like June. What you'll see a lot in these kind of markets is just like a wick down and then a quick, right, like, oops, bounce. So, you know, two ways to trade this kind of market. One, you can be a seller of premium, seller of volatility. Two, you have to sit there in the weeds and wait like you're hunting, right? Like you sit there on your hands, you wait for your level to show up. So here's a level, right? And then you wait for your setup patiently. Do we have a setup now? No, not quite. We have one very much coming, right? Depending on your system. I'll try to trade a candlestick system. So it's like this inside bar. Yeah, all right. It's giving me a trigger. Not yet. We got 5 minutes till this candle close. So if this next candle is above 428, I can trade only to 430. If it's below, cool, I can trade short, but I got to have a trailing stop. So that's just an example. Basic price action. So moving on to the Qs, same thing. So this orange box, sorry for scrolling around everywhere. Orange box is an average week, and again, no, we didn't move the length of average week just yet. So length of average week on the Qs would bring us down to 335. And averages, yeah, they work. So we are well below this prior support level, right? You just got to be careful. Let me see, what would this take us? I'm just going to pull this back. I don't know if this hits a prior support level, but that's what I'm looking for when I do this. So that average week would bring us to this range, and boom, yeah, it does. Okay, so this might be a level to start watching at on the Qs, maybe around 335. So we have this prior resistance, prior support, prior resistance, breakthrough. This was like a good level to start watching for sure. Here's that same broadening range. We're below this broadening range right now. Oops. So yeah, I can see some pretty violent bounces. What I will say, if you haven't traded bear markets before, very violent bounces. So that's why I said be careful not to. I'm not putting any big bets out there for sure, and just be cautious. Either you sit and you snipe and you wait for your levels to happen. So Qs, no level, right? Not here yet. Diamonds, back to daily look, right? Length of an average week, let's say we're opening here 339, that puts us at 330. Is that a level? Yeah, it happens to be March highs, March resistance. Here's a pretty critical support right here, 332, pretty close. So again, this is what I mean, like, am I gonna go short here? How much more downside do I have? We're very close to targets, very, very close. So you have to keep that in mind when you're doing things like this. And again, after a big move like that, the market takes a little bit to digest what's going on. So expect some chop. Iron condors are your friend, iron butterflies, calendars, time spread, things like that. This is IWM, the mid-cap index. Where's my box? I don't know where my box is. Ah, hello box. Here we go. So, opening right here. Below prior, so orange line, prior week low. This is pretty good. This has got probably more room. So this might be one that I would look at. And the length of an average move here would put us to 186. I'm just going to draw that line back and see, does it come into some kind of prior. Ooh, it's right in the middle. That's a bit sketchy.
Yeah,
A bit sketchy. So yeah, I don't think I could tell you I would trade this just yet. You have to wait for this kind of setup. We had this clear consolidation that we broke out of. So yes, this guy can be a pretty big mover. At least the average week here puts me at 185. Again, wait for your system to give you a trigger to go. I don't have one just yet, but of all the indexes, this one looks like it's going to give me a clean signal. Just going to do a quick check on our friend Bitcoin here, still firmly in our downtrend. Again, here's my box. Yeah. So let's see. Is that accurate? Yeah, so right now, interesting level. So orange line, prior week low, right? This is a daily candle. And I'm going to start zooming in. This is how trading really works. It's start higher time frames and start zooming in. Right now, I'm bouncing up off the prior week low. So this is a trigger to go long for a trade, right? And just to be fair, your trigger is right here, but your target is right here, 34.60. And then at that point, you really just got to keep moving your stops up with it as it goes, right? If that clears, then cool. So next target, one by one by one. We're not ever really trading for these big, 60,000 type moves. That's how you get yourself in trouble. But yeah, this looks good for a short-term bounce, for sure. So that's the kind of stuff I'm looking for, right? Do we have a candlestick set up? Do we have a level of importance, right? So prior weeks highs and lows, prior months highs and lows, prior days highs and lows. those are significant, right? Am I near a floor support? Yeah, I do have 29,000 for a floor on Bitcoin. Daily candle right now, that is a short. Tomorrow, maybe. Tomorrow, if we get anything below that 34,000, yeah, I'm short to 29. That's how it is, right? The other one's a short-term trade. Look, you're almost done. Yeah, you're probably done. So now if you go below, yeah, 34. I actually shorted Bitcoin last time, like up over
I
here.
had a feeling you did.
I did, but I stopped out right here. But I'm like, oh yeah, oh well. I don't like being long or short. Crypto futures. Whew, talk about crazy. So here's the big one, TLT. Right, this is 20-year bond. This is what interest. This is inverse to interest rates. So the interest rates go up, the bonds go down. The rates go down, the bonds go up. The bond yield. So the yield is going down and the bond is going up. This could be an interesting one. Maybe short the actual TLT. So why does this happen? So really, there you go. Good job, CJ. Yeah, IWM. That's a clear break. That's a good trade. TLT. So if the market wants the rates to go up, so what happens is when people fly to safety, they buy the bonds, right? And so bonds and bond yields, two different things. This is not a yield. This is just the bond itself. So when they're buying the bonds, it's like a stock. That's a piece of paper. The price of the stock or the bond itself goes up because the yield itself is going because the yield going down, this goes up because it's safety. This should not. I'm seeing us running into some resistance here. Do I have that right? Why do I feel like I have that wrong right now? Anyways,
Oh,
I'm a bond trader.
yeah, you're right.
So, warning.
Yeah,
Anyways, length of an average week right here. This could be an interesting trade, I think, no doubt. So downside to 340 on the week. If we do break over and just directionally neutral, I don't have a signal just yet. 144 if we break up higher, upside to 149, and this little range between prior week high, prior month low is very tradable, typically. So something like that. Quick, easy, simple. Short spurts. Remember, traders, we are only concerned with taking a very small piece of a much larger move. Anything other than that, just that's investing. That's not the same. You just need to be very, very cautious. So that's the first check if you're looking to be a trader. The second check is a sector check, and that's what this looks like. Apologies for so many indicators and stuff. So this is just where I'm looking to see what's the strongest sector of the groups. I'll just clean this up real quick for you. And I got nothing. Really. Let's see. Cleaning this up. Apologies, I didn't have this done before. So OAH was actually a bigger position in my portfolio that I did trim. Looks like that was a good decision. Healthcare, we had UNH go reported. They were the biggest ones. That's still selling off. XLP was one of interest for many, but let's take a look. So this is consumer staples XLP. So this guy is not. So we'll say like, hey, if in a market like this, or even like the crypto space, if the whole thing's selling off, the whole thing's selling off. Yes, this might not sell off as much because consumer staples, but it's still going to sell off. So I mean, if I'm going to fly anywhere, it's going to be to cash for right now. Just breaking below prior week's low, and I might look at something like that. That's prior month. So a realistic target would be right around that prior support on the index. So So again, look for these prior week highs or prior week lows to be tested. OAH, oil services, Schlumberger, Halliburton, things like that. This index, man, it's so far beaten down. So had a nice rally off this level here. And this section here, this is what I'm talking about. When you might see a couple bottoms like bounce, and then a big old wick down below to kind of like stop hunt people out. That's what I'm really just going to be expecting. So if this was the index, let's see, we look a little something like this. This is OAH on S&P right now. Interestingly enough, I might expect something similar where it looks like we're going to bounce, we get a little fake out, and then a wick down to really just catch everyone's stop loss. Not, I mean, that's not what they're doing, but just everyone will get out. I'm going to be waiting for something like this, a big flush, and then jump in once I get a trigger. So generally speaking, that's what I'm going to be looking for right now. Not long a whole lot of stock or anything. XLE looks pretty flat. I'm alert on short. ZV, oh, it's, yeah, TLT. Yeah. Very cool, man. I'm looking at the very same thing. So that like a chart like that doesn't really make sense to me right now. I mean, maybe because, you know, Paul's listening to yelling. So we'll see. I think the bond market wants higher rates. I feel like they're screaming for it. He said he was going to watch the data and take action. Where's the action? We've seen nothing yet. So that's what the market's pissed about right now. Can't blame them, really. XLE, yeah, daily, just kind of flat, right? So again, this is where I would personally just be more of a neutral trader, if anything, and really around those kind of support levels once I get a bounce. That's what I'm gonna be looking for. Anybody want to look at a chart? I think I just had a couple of things like Clorox maybe this is like in XLP kind of territory. This is stock, not an options trader. What do we have? You got Amazon. So this is what I'm looking at typically when I'm looking at a chart before I jump into the day to the like intraday chart. It's 1 week. Well, look, you guys have seen what that looks like. 1 week, first view, quick view, daily view. I'm looking for candlesticks across the board, right? These are my bands, like volatility bands, so I know volatility is expanding when it's in either one of these bands here. So from an options perspective, yeah, prior week low 28.38, 28.40. Did we catch that this morning? Pretty close. Here's a 15, so this is just drilling down. You kind of got this bounce off of it this morning. That was a quick short. Everything was a quick short out of the gate. Now I'm looking at this 15 and we're looking to break below again. Cool. Yeah, you're still going down. We got more room. I think. Wow. There's not a lot. There's not a lot to defend Amazon here. Oof. Really until about 25.
Yeah.
24.70.
Was exactly what I was
This could be a very nice trade. Very nice trade. I like this. So I need to wait for volatility to kind of chill out for a little bit, breathe. If I don't get it, you just got to be kind of scalpy. Maybe you could sell some upside premium. Covered call credit spreads are your friend. Absolutely your friend in this market. Tesla, ooh, triggering as we speak, right? So prior week low or prior month low, breaking now, like now. Yeah, hourly. So weekly, daily, hourly. Breaking below now, you got that little test, rejection. Here's your level, prior month low, right? Ooh, this could be good. Man, they're all so good. And it just moving either a trailing stop to follow the price action. That's ideal. You do have a little, and I'm looking for, before I take a trade, I'm always looking for, one, what's my cost? I'm looking for, two, what's my resistance? What am I going to run into? Where are the issues in front of it? How far back in time do they go? Further back in time they go, it's not that not that important. If it's more recent, it is. So here would be just a quick, yeah, just, I mean, that little blip on the screen, that's 855. So on this rejection here, boom, on a 15, yeah, you've broken here. You're going at least to 865, likely to 855. That's how I can read that. And then you're just moving your stops down with it. So apologies. It's not, I mean, when is it oversold? When is it coming back? Well, when it comes back up, then we'll look at it. Other than that, I think we're good. Big time earnings coming up. Huge week for earnings. Trade with us. You'll have fun. It's going to be cool. It's going to be great. It will be a massive reprieve from this market just bloodbath. Looking forward to it, man. Probably most favorite time of year. I think
Playoff season for us.
consumer
Let's go.
strength is their hedges turned down. Yeah. Procter Gamble, Pepsi. Yeah, we got. I look at like Ultra. That was a pretty good trade recently. I'm not sure if that goes in consumer staples, but yeah, Procter Gamble definitely coming up this week. But very cool. All right, guys. I think that's it for me. Hopefully that was helpful. Did I catch everything? XBI. Why am I thinking XBI? XBI is biotech. Yeah. So if you're looking at biotech, again, investing and trading are two completely independent, unrelated things. So I think that's the biggest issue, like with newer traders. Like if you're looking at something like this, you know, personally, I'll tell you, I'm not a great biotech trader. I gotta look at like offerings, things like that. It's not my sector. Like I come from tech, like high tech, Silicon Valley tech. So that's where I would be most helpful. I'm not, I just know where my strengths are and where they aren't really. From a TA perspective, nah, this is not going up. No way. VUR. You have support. So like if you're thinking of, hey, look, we're going to be at a support level, potential support level, something like this, you can look at that and say, okay. But it doesn't mean buy it now. It means wait, watch for a trigger. Where's my trigger, right? So if you have things like this, like alerts, cool, set an alert at 85.30 when it hits, but don't take the trade just because it's there. Wait for 2 to 5 candlesticks set up. Want it to hold at least 45 minutes to an hour or so, maybe longer if you're thinking investment wise. If you're thinking investment wise, you can be on this weekly chart, daily, weekly, monthly, quarterly charts from an investment perspective. Trading perspective, maybe like 15-hour, something like that. So you're not triggering anything just yet, but it's potential. So keep an eye on it. VUR. Yeah, don't have that. So if that's even a ticker, I don't know. I think we're good for now. All right, guys. Till next week. I'll see you in the servers. It's been fun. Big week this week. I think. Where's my schedule? Yeah. If you don't have it, here's the schedule this week. So we're here, right? Tomorrow we'll have a stream. So we got 1, 2, 3 webinars. IVES is implied volatility event system. 3 earnings trades this week, right in the last hour and a half of close. This one I might start a little bit early. We'll definitely go late on this one because it's just the first one. People still learning the systems. We'll have that hedging webinar Thursday afternoon, and that's a wrap for now. So till next week. See you guys.